Good afternoon, everyone. This is Raman, and together with my teammates Elliot, Suhansu, Jose, we are about to present our simulation report for Capsim from round 1 to 8. So let's begin. So this is our agenda for the day. We'll go with a brief introduction about our company Chester, and we'll follow up with our decision overview for each round under every department. That is R&D, marketing, production, finance, total quality management, and human resource. Finally, we will be reflecting upon our strategic planning during the beginning of the rounds and as the round commences, and then we will also be reviewing upon our performance, like what we did and what actually we could do better. And then finally, we will be talking about the lessons learned from the Capsim simulation related to the real business environment and then recommendations for us. So we adopted a broadcast leader strategy, and we aim to maintain a presence in every segment: traditional, high-end, low-end, size, and performance. But however, as the round progressed, we did not focus on the high-end, as the product wasn't performing well up to our expectations. And when we wanted to introduce a new high-end product, we did not had enough time to do so. And then we will walk through our decisions for all the competitions round 1 to 8, like just a quick recap, and then reflect on our plannings, performance, learnings, and the recommendations. So for the first two rounds, our strategy was pretty simple, like just align the products as per the customer buying criteria, and which we did, and the results were also pretty amazing because we were among the top two companies in terms of market share and the sales. But during round 3 and 4, we were under the misconception that we only had $1 million of budget to invest under the R&D, and the cost that shows in Capsim up for R&D is already in hundreds and thousands of dollars. And because of that, we only invested like $250 or $200 on each product. So which led us to like our products to be not aligned according to the customer expectation. So following that, we went bankrupt, and during round 5 and 6, we decided to retire our underperforming products, that is Seed and Cure, and as a result, we introduced two new products under the side segment, Camp and City. And for round 7 and 8, we just aligned our product based on the customer buying criteria.
So, to start off with rounds one and two, we gave our products a reasonably high price, and also we maxed out our promo and sales budget along with the forecast as well. And then for rounds three and four, we increased it a little bit so that we can try to make profit out of the products. And halfway through the simulation, we noticed that we had few products that were not selling that much, so we decided to retire them, and at the same time introduced two more products. And by the seventh and eighth round, we decided to lower our prices for our products to make it more um, affordable for our consumers.
So for production, in round one and two, as we started, we was second in the market, and we was really doing good with our production, and the sales in the market was good. But when it come to round 3 and 4, we was trying to make a big change and to gain more profit, but due to some broad actions, we faces bankruptcy. But still, we didn't go down. But still, we tried to move on to focus on our future. So for round after round 3 and 4, we cut off the production to save more money to support the organization. But and at the same time, we retired two products, which was inventory was high and just sitting there, and also at the same time was giving loss to the company without any sales. And at the same time, for round 5 and 6, we introduced two products, which was Camp and City, and we put their perfect segments, and it started giving us sales, and we was back on track even though with the bankruptcy. But with all this, we figure out that what was our biggest steps we didn't have to take on.
Hi, my name is Ellert, and I'm going to be discussing the group's financial statement. So first, I'm going to show some highlights with our cash statement of cash flows. So as you can see from here, we have a persistent losses and negative operating cash flows. Like as you can see, our net income, our profitability is the major concern. From first round to eighth round, we are consistently reporting a net losses with only a small profit in the first round. Next is our inventory. As you can see from here, we have a significant increase in inventory, which is like we are overstacking our inventory, and the money is slipping in the inventory. So you can see that our statement of cash flows is in serious financial distress. So next is our balance sheet. Yes, you can also see here that our balance sheet is in bad financial position. But there are some key highlights with our balance sheet, like in the round one, in the first round, we started with a positive retained earnings. In round 2, total asset and equity have increased as well. In round 4, the total asset continued to grow, like showing expansion of the company's resources. And in round 6, our accounts payable is it's really low compared to other rounds. And in round 8, our common stocks has increased. Like, it's indicating an additional capital raise through equity. And the highlights from the income statement is you can see from here that our variable cost is too high from first to eighth round. And also our earnings before income tax declines rapidly and becomes significantly negative from round 3 onwards. And we do have an inconsistent sales performance as well. We started with a small profit from round 1 and 2, and from round 3 to 6, the sales are pretty low, but from round 7 and 8, the sales went up, which indicates that the company was able to generate revenue. So that's the highlights of of the company's financial statement. Thank you.
So our major focus for the human resource department has always been to reduce the turnover rate and then retain the employees, so which we did during the first 5 rounds. But after the round five, we realized that we cannot keep on like investing heavily on the human resource because during round 3, 4, and 5 we were bankrupt and we're not able to make any sales and generate revenue. So from rounds 6 and onwards, we invested really low, relatively low, like around 300 or 500 each under each section, like the retention, manufacturing training, and sales and compensation. So because of and this strategy of ours that we implemented on round 6, 7, and 8 demonstrates a prudent and balanced approach, prioritizing a sustainable growth over aggressive spending. By allocating resources evenly across scientists, manufacturing, and sales, we ensured a holistic development of our workforce rather than over-investing in a single area. It allowed us to achieve positive outcomes, including improved R&D cycle time and increased accessibility without incurring the substantial cost or potential risk associated with heavier investment. While like some of our competitors, as we can see, might have shown higher overall spending, our efficiency in resource allocation allowed them to make meaningful progress while maintaining financial stability, a crucial factor for long-term success.
Hi, so I'm going to be explaining our total quality management. So, total quality management is about making sure everyone in the business works together to provide the best possible products and services, which leads to happier customers and more successful company. So, our team spent 4,100 in various TQM trainings to make improvement with our products and services. And the overall result is we made reductions associated with material, labor, and administrative costs. You can see that we are all negative on that part. And increased by 0.5%, which shows an improvement in customer demand for our products and services. Thank you.
So first, our strategic planning, our team strategy at first of the beginning of the simulation was to base all our categories from R&D, marketing, production, and finance from the customer criteria, so that we will know and understand how to adjust our approach. So, which is why midway through our simulation, we were pricing our products at a reasonably high price, so that we can try to make a profit at least. But then halfway through the simulation, we noticed that we weren't making any profit because our prices were too high and it was too much for our consumers. So our adjustment was, we did this late actually, was to adjust our prices to make it at least affordable for our consumers and for us to gain a profit as well. And also to lessen our budgeting for both the sales and promo. And also there were some rounds wherein we set it at the high price for our forecast for some products. And also midway through, since we noticed that two of our products were not selling as much, so there was no point in keeping them, so we decided to retire them. And to make up for it, we also decided to introduce two new products, which after a few rounds by the time we introduced them, we were actually making profit off of them. So we did not meet our goals for most of the simulation, but at the end we were able to at least make a profit for with the products that we were able to have, and also including the products that we introduced late in the simulation as well.
For performance review here, as you can see in chart, there is a segment for high failure, low failure, high success, and low success products. As our high failure product was Cure, as the segment was far then the demand of customers, price was high due to high adjustment in the forecast in marketing, and our low failure was Sid, which was success at the starting, but in round 3 and 4 and 5 as well it was showing decline, so we needed to retire it. And because of these products, we had to been through bankruptcy as well. And our low success product was Core, and our high success product at the starting till round six was Cake. After the can was in the market and the sale was booming, and so our high success product became Camp. Thank you.
So throughout this simulation, we learned that it's always necessary to keep an eye on the competitors as well. Why? Because if they introduce something new, like some new products based on the consumer demand, they will gain they will gain a competitive and strategic advantages over us, which will allow them to gain more market share. So that's why we need to keep an eye on our competitors as well. And also we need to be aware of changing consumer preferences and adjust our product accordingly because it will help us maintain our reputation in the market and increase the consumer satisfaction. We also learned that effective pricing of the product is necessary because during round 3 and 4, we went bankrupt because of our poor pricing decision. And then it resulted in no sales, but just increase in inventory. But in the following rounds, round 6, 7, and 8, we reduced the prices the, by like checking our competitors' prices. So, and then we noticed a heavy difference. We also learned that it's important to identify the demands and provide consumers with a new update of the same products or introduce a new product every once in a while. It will not only create a curiosity among the consumers regarding the product, but also help gain strategic advantage and competitive advantage over competitors. And the decision that led to the best outcomes, of course, like as I mentioned before, is that our pricing decision that during round 6 until the end of round 5, we were not able to sell any product. But during the round 6, when we checked the reports, we noticed that our price was more than almost double of what our competitors were selling their products for. So to able to like come back in the market, we reduced our prices by more than a half. So for example, let's say if our competitor, like the top competitors, Baldwin and Erie, they were selling the product for $15, we decided to sell it for $14.50. So we could sell the products and gain more market share. And not only that, but we also adjusted our product based on the customer buying criteria, regardless of how much the R&D costs, regardless of the R&D cost. So yeah, those are the decisions that led us to the best outcomes. Like it helped us gain the market share. So during round 3 and 4 and 5, we were like till 0% in the market share. But by the end of round 8, the time simulation is over. We had 17.8% market share. And the challenges we faced was, of course, like in the beginning, we did not know like how to do things, and we were also under the misconception that we only had like $1 million of our R&D budget, and the R&D cost that displays under the Capsim like was already in hundreds and thousands of dollars. So we spent like $250 each in every product like during the first 4 rounds. So because of which our products were not aligned according to the customer's brand criteria as well.
For the future recommendations to improve the company's performance, we have to implement these three things. First is a cost reduction. So you have to implement a cost control. We need to analyze and negotiate better prices for raw materials. We also need to implement a better inventory forecasting methods to avoid overstocking and reduce carrying costs. Next is revenue growth. Okay, we need to analyze market demands and conduct market research to identify new opportunities and understand what are the customers' needs. And we also need to develop a more consistent and effective sales strategy. And lastly is the debt reduction. We need to focus on reducing the high levels of short-term debt. So by implementing these recommendations, the company will be in good financial position and ensure its long-term sustainability. Thank you.
And thank you for listening to our presentation and paying close attention. And thank you again for bearing with us for so long.